Hello traders and welcome to our live trading webinar video. On this video, I'm just going to be talking about applying the stretch principle in real-time markets. It's still not on here, founder of Master Markets, Illustrates Conference and the Traders Open Day. Right, so we have learned so far about directional bias from our previous videos, and we also have talked about basically the trending bars concept and the stretch concept. Today, I'm just going to concentrate a little bit more on the stretch and how we apply it in real time. So just for you all, just to recap, if you take a look at this red bar here, you can see that the stretch is to the opposite side. As some of you may be able to remember the definition, the stretch is nothing but the nearest extreme to the open. Okay, now what I want to do now is keeping our focus on this particular bar. We are going to see how that looks on the 1 hour time frame. So this is the daily time frame at the moment. So let's see how that looks on a 1 hour time frame with the stretch indicator in place. Okay, right, so let's move on to that then. So that's the 1 hour here, and that's the same bar that we are seeing, okay, which is the 21st of August, and you can see that's the 21st of August as well. So let's look to see what we have done here. Now, this blue line over here is what we call the open, okay, that's what the indicator draws for us from yesterday's close. Okay, so from this close, then it draws a horizontal line, which is the open, and then on the top and at the bottom, it draws an equidistant stretch. Okay, equidistant stretch. Now, how do we derive this number? It actually takes the average stretch of the last 10 days. Okay, the average stretch of the last 10 days. So for example, if you go back to the daily time frame, so all it does is that it keeps taking all the stretch. So here the stretch is to the upside, here the stretch is to the upside, here the stretch is to the upside, here the stretch is to the low side. So it keeps calculating the distance. Let's say this one is 2 pips, 3 pips, 5 pips, 7 pips. It adds all of them for 10 days. Usually is ST10. So it adds it all up for 10 days and then divide it by number 10, and you get the value which is known as the average stretch. So once you get that value, then what it then does, let's say the value is like x pips or whatever, right? And then what it does is that it draws an equidistant stretch on the up and the bottom side, okay? On the top, on the bottom side here, so you can see it's equidistant. So for example, if I were to measure that, I can see that the stretch 10 for this last 10 days was 13 or 14 pips, as you can see over here. Okay, yeah, that's what it does. It draws equidistant. Now, so what happened then? So when the day transpires by, you can see that from the open, right, the nearest extreme was here. So this was the high of the bar, right? And then this was the low of the bar. So if I were to draw it very easily, I can put my open here, and then it went to the top of this line here, and then it came all the way down to here, right? That was the low, isn't it? That's how I can draw using this 1 hour bars for the day. And finally, where is the close price? You can see that the close was finally on this bar here, wasn't it? So that was the close. So you can see its close was lower than the open, so therefore it becomes a red bar. Okay, so that's how you interpret the data from the 1 hour to becoming a full-sized daily bar. Now, here's the interesting part. I believe you'll find it interesting. Something you can start thinking about. Now, here was actually um, today's bar, right? But I've hidden the data of what happened afterwards. So let's take a look at this, right? So at this time where this square box is, this is basically brings it to 8 a.m. So this is the 7 to 8 AM bar, okay, the 1 hour bar, right? So at this time, if you were to draw, as of now, the stretch is to the top side, isn't it? So if I were to draw it in terms of a full size bar summarizing all these 1 hour bars, then it's to the low and it's closed here at the moment, right? But however, do remember that as of now, it's only 8 a.m., right? Because I've covered the other data. And this could happen to you in real time, isn't it? Is what we're going to be looking at in the live trading webinar as well. Now, as you can then see, you will still be asking yourself at 8 a.m., of course, the full day hasn't passed by, has it? 12 hours until 10 p.m., and then more or less the bar will be set, the high and the low. But still, there's another good 10, 12 hours to go by. So you can be still asking yourself, okay, where is the stretch going to be for the day? Is it going to be to the top or is it going to be to the bottom, isn't it? Right? As of now, it looks like it's going to be the top, but that can change because this high can be taken out. That's why I said in the previous videos that your directional bias is very, very important. Okay, right. So then, once you move forward, let's see what happens. Then you get a very big bar like that. You see, now the mechanics have changed, does it not? Now it's almost equidistant here, actually, just by a little bit. I mean, it's to the bottom, actually, to the bottom side is a bit more bigger to the bottom than to the top. So the stretch is still to the top. So you're asking yourself, okay, where is the stretch? Where is the stretch going to form, right? But you wouldn't know. That's why the directional bias is so important. All right. And that's why I did talk about the directional bias of open equity as well, looking at the daily time frame. But then, as you can see, as time progressed, then it did hover around there. As of now, you can see that the stretch is to the bottom because this is smaller than to the top, just by a little bit, not by that much, just by a little bit. So it hovers around there again, as you can see. So if I were to take it from the open to the bottom, that's about 21 pips. That's about 26 pips, right? Just by 5 pips, the stretch is to the bottom. Remember, the stretch is the nearest extreme to the open. And then finally, then you can see then it starts to take off. All right. Then you can see that the stretch is more and more to the bottom as more of the bar starts to form. Okay. And then it carries on upwards and upwards and upwards. Okay. And then you can start to see that, yeah, definitely the stretch is to the bottom today. So of course, the probability of the stretch to the bottom or to the top starts to increase based on a number of factors which we will start to look in the live trading webinar. Okay, I think that's enough for today. So keep asking yourself when you look at the charts in the days to come, is then ask yourself as of that hour, as of that minute, is the stretch to the bottom or is the stretch to the top today? Has it set itself in stone? That's what you got to keep asking and keep thinking. And if you go along these lines, you'll get better and better at it, and then better and better at also minimizing your risk and letting your profits run and letting your cutting your losses short as well. So keep thinking on that. Very powerful concept, and it'll definitely help you go down a long way in your trading career and help you trade with conviction. And as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.